Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the September 14th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one, though. The easy way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead, let those fingers do the walking. No, don't give me the finger. That means go ahead and type an email. Send it to steve@tfnn.com. Inside the subject heading, please put radio show question. And of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magnificent, magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Let's Show. All the indices trading in the green, up the smallest percentage gain. Looks like the transports are only up 0.75% or 85 points. Otherwise, everything is up over 1%. The Russell's up 2.5% out there. So a nice move, but the question is move and move to where? So we're going to go take a look at that. So let's begin by taking a look at, let's go take a look at the market profiles. They have shifted. We're also taking a look at the December contract out here. So when we were last together, I believe that would have been on Tuesday of last week. We were looking at the September contract for the equity futures contract. So here in the left-hand panel, you've got the ES Mini. On this chart, you've got both the daily and the weekly set of profiles. You'll see it's a new profile it's trying to form today, bullish in structure, price is well above the center. And if you're trying to find the numbers for the profiles out here, if you look in the data box, it's over on the left-hand side. I'm just making sure my crosshair is over all the way to the right. So you'll see those in the data box. So, for example, you're looking at the daily time frame, and the left-hand side of the S&P, upper left-hand side of the ES Mini chart, you'll see 33.15. That's the bottom of the box. 33.44 is the center. 34.31 is the top of the profile. So that is where price, we would say from a profile perspective, bullish structured box, price trading above the center of that box. This is assuming that this profile takes hold. I won't know until this evening, but right now we're going to go with the data. I do know that buyers and sellers are taking their positions in these locations. I know because they called me. No, they didn't call me. They called me by going ahead and posting this information on the chart out here. So 34.31 is the target for the ES Mini. That may be. Now, if price gets above that, then 34.57. So that's really range. That's the top, by the way, of the weekly profile out there. So that's your real resistance level, 34.31, 34.57. Inside the NQ, also a daily profile that's trying to form today. The bottom is at 11.076. The center, which we're trading just above right now at 11.228, we're about 20 points above that. A close above the center suggests a move over to 11.532. Inside the Dow, brand new bullish structured daily profile, price well above the center of that profile, as well as the center of its weekly profile. So this is suggesting a move up to 28.257. And inside the Russell 2000, which is having that nice big move today, looks like she or he wants to target the top of its profile out there. Now, this is bearish in structure, 15.45. So those become the price targets for where the market wants to head. Now, if the market are going to be able to head to those levels, and really when I say the market, I'm actually just referring to the S&P 500, well, it needs a couple of things. One of those things would be positive market breadth for the daily time frame. So let's go check in on that. So we take a look at that. So when we take a look at market breadth, again, we're using our TAS market profiles, and we're looking at the number, of instruments that are trading above the above the top of their profiles versus the number of instruments trading below the bottom of their profiles. So now we take a look at this here. You're going to see that during the past hour or so, that's about as much as I can nail down. It's been since about noon out here. We've had a shift in that there are now inside the S&P 500 more instruments trading above the top of the profile. When you trade above resistance, prices breaking out just from its daily, in the simplest interpretation out here. So this is saying something to you folks out there that would be short the S&P 500, because this is not what you want to see out here. But you also now know where the cap area is inside the ES mini. But if you get a close today at 4 o'clock with a bullish market breadth crossover, which is what we've got. There's only 86 instruments right now in the S&P 500 where price is trading below the bottom of the profile. So you've got this nice little shift here. This is suggesting to you and I, so this is one element, this is suggesting to you and I that the ES mini will go ahead and make a run for the top of that profile. So that now, as long as I'm over here, that was the S&P 500. Let's also go ahead and take a look at the NDX 100 out here and see where it is on its daily time frame. It is still slightly bearish from a crossover standpoint of its TAS market profiles. And here we have 13 instruments, only 13 in the NDX 100 trading above the top of the profile, whereas you've got 28 below the bottom. In order for the NDX 100 to really get its mojo, make its way up to the top of the profile, ideally you'd see a bullish crossover here. Sticking with the theme of the S&P 500 though, because that's the easiest thing for us to do. So the S&P 500 has that positive market breadth in order to be able to make that move up to the top of the profile. So that should help you. If you are short, that should help you. Of course, that's an end-of-day reading out there. How about an intraday reading? And it's still an end-of-day reading, but it's an intraday reading right now, and that is where's that spot volatility index trading? Well, as we take a look at this chart, what we're going to see is the 50-day exponential moving average for the spot volatility index is 2660. Price is trading almost a buck below that, 25.68. If price closes below the 50-day exponential moving average, you would have that. You would also have the market breadth, and it would be saying, geez, being short the S&P 500 is going to go ahead and take a lot of pressure as price moves up to the top of that profile. Now, that profile may not take hold by day's end, but we use the information that we have available to us right now. The information we have available to us right now, forget about profiles. You've got the spot volatility index below its 50-day, and you've got positive market breadth from a TAS market profile standpoint. That is not the set of ingredients for a market that wants to move lower. So ideally, the way that you would be looking at this, because this is still just a counter trend rally or potentially a counter trend rally out here. We really won't know. It's a counter trend rally until resistance gets taken out. And so resistance for the S&P 500 would really be that 34.57. If you're asking yourself, where is it that I want to put on the short trade for the S&P 500? Well, I can guarantee you, as much as I can guarantee anything out there, that it's not right now at 1:14 in the afternoon. Of course, we haven't looked at the short-term time frame charts. Where it is between 34.31 and 34.57. And the price closed over at 34.57, well, then that would have been a wrong move. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go dig down into we spent that first segment primarily on the S&P 500. It's the NASDAQ that has been leading things to the downside. So let's go take a look at the top 8 holdings and to see what messages we're getting here. So let's begin by taking a look at Microsoft. As we take a look at the daily time frame chart for Microsoft, we see a nice Rhodes momentum indicator topping pattern. That was confirmed with that bear sash candle. Price targets, being profiles, are certainly the TD9 breakout level of 207.51. What can we see here? We can see 207.51 today inside of Microsoft, in essence, has been resistance. So price is below the breakout level. Today's going to be bar number 7 of a TD9 count. We would need to see a lower low than Friday, either today, tomorrow. Tomorrow will be 8. Wednesday or Thursday. So between now and Thursday, if there's a lower low and this count pattern stays in effect, day 7, actually, the Microsoft will not have a TD9 count pattern out here. Price would have to close below bar number 3 today. And that close is at 202.66. Not that can't happen, but it just doesn't seem likely at this stage. So no bottoming signal here inside of Microsoft. If things really get rocking and rolling to the downside, the next target, so when you break a key level of support being the TD9 count area, Microsoft could be giving us a signal that wants to move to its next breakout area, and that's at 171.88. But right now, what Microsoft is suggesting to you and I is there's nothing more than a counter trend rally that we're looking at that is present at the moment. If we take a look at Apple, I'm not sure the exact percentage that this represents inside the NDX 100, but it's a number 1 or number 2 slot. Chart looks very similar to that of Microsoft with one exception. Price has held its breakout level of 113.05. So that's the number you're going to want to pay attention to. 2 closes below that would suggest Apple could pull back to 93.71. That's its next TD9 breakout. This did have a wave number 7 top. That is letter G as you take a look at it on my screen out there. So both Microsoft and Apple have those topping signals. Microsoft having broken a key area of support, and Apple, not so much, at least not yet. We take a look at Amazon. Amazon here, come on. What happened to my cursor? There we go. Let's expand out the chart here. Amazon around 10% of the NDX 100. Price is trading below the bottom of its bullish structured profile. It did that on Friday, broke it. So it looks to me like Amazon is getting ready to pull back to its TD9 breakout level. Now it's 29.96. Today will be bar number 7 of a TD9 count, and if we can see the following between now and Thursday, a move, just simply a move below Friday's low, but preferably above, as a closing basis, above 29.96, this could be setting up a TD9 count. So in other words, Stevie is saying Amazon may be setting up a buy signal here between now and Thursday. Now is not the time. Again, we'd be waiting for that TD9 count pattern to be fulfilled. But Amazon, pullback, but above key levels of support out there, so nothing broken in it. If we take a look at the googly one out here, you've got that confirmed A to B equals CD to the upside out here. Price closed below that breakout level of 1538.20 on Friday, still below it. Price may be targeting 1466 out here. So you got the sell signals there. And so when you get those sell patterns, remember, all the sellers really have the, at least the initial offer, the initial, what's the initial? The initial what? The I don't know, the initial move. There we go. The initial move out there would be to get back to support. What's price do at support? Remember, for support, we use Stevie's green line, the oscillator and change line. We use our profiles, and we use our TD9 count levels to identify our breakout and breakdown areas. We go take a look at Facebook. Facebook topped with a TD9 count out here. Price is pulled back. It's found support at the bottom of its profile. Breakout level of support is 259.26. So nothing really broken here, just a top with price pulling back to key levels of support that, in the case of Facebook at this stage here, have held. We take a look at Tesla. Tesla out here trading above its breakout level. That would be a 287 out here. We can find the A to B equals CD patterns and so forth, but Tesla at this stage here has not broken down. Big move, most certainly, from above 500 to below 340 out there, but still we have to take a look at support and resistance, not so much the percentage move to the downside. So really nothing is broken inside of Tesla. How about NVIDIA in the news today with the buyout of ARM Holdings out here? Price got up to Stevie's green line, 524 and a 524 and change out there. That has acted as resistance. Still nothing broken here, so to speak. You need to see it close below 438.33 inside of NVIDIA, and that still has potential for that outcome. And lastly, let's finish this off by taking a look at Adobe. What do we know about Adobe? Nice Rhodes momentum indicator top, but still price above the breakout level, 444.43. So what this tells us, yeah, we've got these topping signals. That all makes sense. You probably didn't need me to tell you, but what you did need me for was where are those key breakout levels? Inside of Microsoft, price is trading below it. Inside of Apple, price is trading on it. Inside of Amazon, price is above it. Inside of Google, price is just slightly below it. But inside the rest of them, price is above it. So you've got a bit of a mixed bag out here, but nothing that is truly broken down. But with Microsoft and Apple being such a significant weight out there, counter trend rallies from them would get Microsoft up to about 214. I'm not saying that's what's going to unfold out here. And in the case of Apple, the number here, the real resistance level would be 122.85. So that's what's going on inside of the NDX 100. If we look at the short-term time frames out here, go back to the futures contracts and take a look and see what we can see out here. Here we're going to see inside the, so you got the ES Mini. This is a 30-minute time frame. Up on top, then the NQ, then the Dow, and then the Russell 2000. You'll see that each of these form wave number 7 out here. They did it at different times. Inside the ES, the NQ, and the Russell 2000 happened at 10:30. Got the wave number 7, that is letter G. The Russell 2000 just kind of ignored it, because about 3 or 4 bars later it says sayonara, adios, amigos. That is not what is going to stop me out there. Now, this is at the moment in bar number 8 of a TD9 count, which can be a topping pattern out here. We need bar number 9 to complete, and that won't take place until 2 p.m. But at this stage, we're back to the Russell having a topping pattern, but price is above Stevie's green line out there. You can see it at the very bottom of the screen. Inside the Dow, got to wave number 7, but did it lose that? Did it close above that? It did. So that topping pattern is gone. Can't use that. The ES Mini we can, and inside of the NQ we can. Now here's what's most important. Breakout support inside the ES Mini. Should price move below the bottom of its profile on a 30-minute basis, you're looking at 33.46 is the number. In the case of the NQ, its breakout levels down at 10,980. In the case of the Dow, its breakout levels at 27,424. And for the Russell 2000, well, right now it's 1485. But as we said, by 2 o'clock, this could form a TD9 count. And if it does, then the actual breakout support level is going to be, let me get down and actually get into the area. It's going to be 1505 even Steven. So to summarize, short-term charts out here, Russell 2000 by 2 p.m. may form a short-term top. The Dow, we don't have it. Maybe just pulling back to 27,793 to test the support of the bottom of that profile out there. This is Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 340, S&P 45, NASDAQ 100 up 154 points out here. So let's go to our first question, the only question that we've got. You can always give us a call at 877-927-6648, or you can send me an email, steve@tfnn.com, as Jared did out here. And, of course, in our Tigers Den, any ping will do. So let's go ahead. Jared is interested in taking a look at ticker symbol BLNK. BLNK is a Blink charging company out there. And Jared says, can you give me good levels of support for a possible long entries? Today's move a sign of strength? No, today's move is not a sign of strength out here. At least Stevie's interpretation. At least Obi-Wan Kenobi's interpretation out there. Jared, in order to have a sign of strength, and I'll point you to a sign of strength out here, that sign of strength, the first one would be on June 29th. On June 29th, Blink had wide price spread and it had accelerated volume. If you look at the very bottom panel of my screen, there you'll see the volume. There you'll see the unusual volume activity on June 29th, and it had wide price spread. That is a sign of strength. Today, the volume is 1.6 million shares so far. On Friday, you did 1.1 million shares. A couple days ago, you did 2.9 million shares out here. So no sign of strength out here with regard to Blink. With regard to Blink, though, and its daily profile, it does have a equally a fair valued profile, not bullish or bearish in structure. Support is 633, resistance is 746. That's what you were asking for. On the weekly time frame, support is 436, resistance is 890. And the monthly time frame, we're not even going to spend any time on this instrument out here. Looks like, I don't know, maybe this was a reverse split because it was one time trading up in the $100 area, trading right now at 663 out here. So let me pull over my other charts. Now, my other charts right now are not updating for today's data. I just have too many other things running in the background, but that's okay. It still gives me the information that you and I need, basically, which you'll see that Stevie's red line, without today's data, it's priced at 726 out here. Probably more likely about the 746 level. But see how that line changed from green to red a few days ago? That's telling us that price and that line want to catch up to each other. And we don't know if price tests and rejects it, Jared, gets up, tests it, closes back below it. Well, it's going to signal that price is going to pull back to at least 570. That's its breakout level. And below that, well, then you're looking at $2.40 out here. And that would be because the oscillator and change line is red. Tells us our price oscillator. The difference between a 19 and 39 period exponential moving average on price is below zero. And that's a bearish scenario. The only way it starts to turn counter trend rallyish or bullish would be to close above that level. So that's the very next thing that you've got to be watching for. Because no, today is not a sign of strength. Not at least technically the way that the folks here at TFNN view it, or at least the way that I'm saying that we view it out here. And so your question was, can you give me good levels for support? I think what you want to do out here, Jared, is you want to wait to see how this test unfolds. That would be my recommendation out here. On the weekly time frame, and you got the TD9 count top out here. So you got bar number 9. Let me get my cursor out here. That occurred. Bar number 9 confirmed the top was on the trading session of July 29th. Now, the cool thing about that pattern is you've got to wait for one more bar. Vasily. One more bar, one more ping. And because it can be the high of bars 8, 9, or 10, not really 10, but the bar following 9, the way Stevie likes to look at it as the high. Well, that's what turned out here. Jared, on July 30th, that was the bar following bar number 9 out there. So you've got that top, pushing price back to support, 570 out here. But because of the fact that price, because of Stevie's green line turning red out here, you want to really wait to see what the outcome of that is before you take your next move. So I hope that helps you out. Thank you very much for writing in. Next question, if we have one. No questions. Well, you take a couple of days off from vacation, and it's, hey, adios, buddy. Just kidding you. So let's go take a look at some instruments that I know that folks are interested in taking a look at what's going on in the commodity sector and the U.S. dollar index sector. Let's go take a look at those. So let's start by taking a look at the U.S. dollar. This is September. That's okay. Let's, here's September. September, you can see a nice Rhodes momentum indicator bottom. Hammer candle, half a dozen trading sessions ago or more. Out there, that solidified the bottom. What has price done? Price keeps finding resistance where it should, which is the top of the daily profiles out here. 93.37 is the top of its bearish structured profile. This pattern here still remains bullish. The only way it gets bearish would be a close below 92.52. That is the bottom of its daily profile. Now, that is September. Let's change this to December and give you those numbers out here. So give me a moment to pull this up. Here we go. You'll see the same Rhodes momentum indicator bottom, that nice bullish engulfing candle. I believe on the September contract, it was a hammer candle out there. That doesn't matter. We still have a bearish structured profile, and resistance is 93.55. Support is the bottom of that profile, and that's at 92.31. Now, because we're on the December contract, if price is able to close above 93.55, and that's a key number to watch out here inside the U.S. dollar index, it's signaling to you and I a price move up to 96.61. That is the TD9 breakdown level for its December contract. The caveat is today is bar number 7 of a TD9 count. And if price is able to maintain this pattern and make higher highs over the course of the next 3 trading sessions, the move up to 96.62 basically might get sidetracked. So we don't know if the TD9 count pattern here will complete or not. We'll have to watch that over the coming days. We know where key level of resistance is, 93.55, and a close above that then opens up that door for 96.62 unless we see some other type of topping pattern form. So that's what's going on inside of the U.S. dollar index. What's going on inside of gold? Good question. Let's go take a look at my black background charts at least first out here and see where gold is trading. It's trading, I can tell you, it's trading in between support and resistance. We're taking a look at the December contract, so you're looking at panel number 2 from the left-hand side or panel number 3 from the right-hand side. And here you will see support, 1920.70, bullish structured profile. You'll see a descending trend line, which price is running into, we see 2 descending trend lines out there. Those are resistance points, as well as the top of that profile, 1992.30. In order for gold to get its mojo out here, price must close above resistance. It hasn't done that. And that's the 1992.30 number that you're going to want to keep your eye on. The trend lines are the only thing stopping price from getting up to that level. But this is what you'd be keeping your eyes on. Let's pull over Stevie's other charts. Did they open? Here we go. Okay. I'll pull over my other daily and weekly time frame charts out there because it's really important. It's mucho grande important out here for those of you that are long gold. If we take a look at the weekly time frame chart out here, what happened last week was it was the second close below Stevie's green line. You can see that. You can see the TD9 count pattern. You can see price now trading below Stevie's green line. That's suggesting to us on a weekly basis, gold wants to pull back even further. And that pull back even further, folks, can truly be 1730.70. Again, price just pulling back to the breakout level. We looked at, when we began the show, I believe we looked at the cash indices, or maybe that was during the 1 o'clock update out there, and we saw how prices pull back to breakout levels. It does it for all time frames. And you've got a valid topping pattern inside of gold. I'm not saying that it happens tomorrow or the next day out here, but the weekly chart for gold is saying be careful. Right now, with regard to gold, all this is just a counter trend rally. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 302, S&P 41, NASDAQ 100, 146. Got a couple more questions that have come in by email. Would love to hear from you as well. Steve at TFNN.com. Please put radio show question in the heading of your email. Mike Stone, well, I don't give out the last names, almost did there. Mike S. Wants to, and Stone was not his last name. Close, but no cigar. Wants to take a look at GFI, that is Gold Fields out here. So as we take a look at it, a stellar day for a number of reasons out here. One, you've got wide price spread and accelerated volume. Straight out of 1450, it's trading above prior highs out there. So that is bullish. What's most important here is the weekly. So you're going to want to watch the weekly level. Now, granted, today, Mike, price is trading above the top of the weekly profile. The top of the weekly profile is $14.39. What is important about that is that was also on a weekly basis a TD 9-count high. So if price closes above that level today, we'll call it let me give you the exact number out here, 1440. If price closes above 1440 on Friday, then this is telling you you've got a breakout on a weekly basis going on, as price would have taken out a topping pattern out there. If price closes below it, well, then you don't have that signal. If anything, you have maybe consolidation. Consolidation would be from about the low 12s, up to this 1450 type area out here. But right now, let's go with the message of the market. And the message is this is bullish, and this wants to continue to move higher. Now, move higher to where? That's a bit complicated out here, but we'll make it less complicated. We just simply are going to look at some prior swing areas out here, and you're going to see it's not that much higher than where we're trading right now. The highest level was back on April 1st, 2011, and that price point was 1610. So that's an area where price could run into resistance. If price can clear 1610, there's no real, if I were going to draw an A to B equals CD pattern, which I will, because I know somebody was asking me to draw that pattern. I could just feel it in my bones. Your A point out here on a weekly basis is going to be the low from September in 2018. The B point is going to be the high of February 2020, and the C point is going to be the March low out there. So this is going to be our price projection tool. You'll see that this is a very strong move on a weekly basis. Price is well inside the C to D angle out here. And so its next move is 1519. Again, you've got that 16-ish type area out here. And above that, then you've got your 2.618 A to B equals C to the upside. That's 1871. So that's what the daily or the weekly time frame chart is signaling to us. And I think that's really the better. You've got volume. By the way, volume today is 11.2 million shares, taken out a swing point that had 12 million shares. So everything here is looking good. No reason for me to draw in that other A to B equals CD pattern. So, Mike, that's what we see when we take a look at GFI. Again, you want to see a close this week above 1450 out there. Tim M writes in, he says, Steve, which markets would you say is the best for a long position, and which one is the best for a bear position. So when you say markets, I'm assuming you're talking about just your core four, Tim, and I don't know if that's the case out there. I'm going to go with that as the assumption at this stage. If that's not the assumption, just be a little bit more descriptive to help me out. That would be cool. So how are we going to make this determination? So I think you have to make the determination as a reward risk out here. So if you're looking at the S&P 500 and we're using a daily time frame out here, here's what I can you do the math on this. The price target to the upside would be 34.51. That's Stevie's green line. Support is 33.26. It's trading at 33.85. So those are the numbers there. It's a math exercise you would need to go through from a daily basis to determine whether the risk reward is worth it at this stage. For the S&P 500, what I do know, is that price pulled back to its breakout level and held. So 33.26, we're at 33.85. Really would have Friday as price went down into that area. That would have been your buy point out here potentially for that. But holding support is bullish. That's the S&P 500. Inside the NDX 100, price is trading above Stevie's green line. Above the TD9 count breakout level. That's at 11.106. Anything below that says probably want to close that trade. And its price target would be 11,692, the oscillator and change line. In the Dow, and so there might be enough movement to justify it, the NDX 100. If you take a look at the Dow out here, the Dow is trading above Stevie's or the TD9 count breakout level, 27,686. Its price target about 28,327. Just me looking at it, the reward risk isn't going to be there. I mean, you were asking which one is the best for a long position. Because they're all trading above the breakout level, you could consider each of these candidates. The question becomes, okay, if this is just a counter trend rally, which right now I'm going to assume that it is, until proven otherwise out here, then you've got to do that reward risk. And so 1552 would be the reward, so to speak, on Russell 2000, but 1483 is your risk point to the downside. So that's not worth it. The Dow's not worth it from that standpoint. It would only be the NQ and the S&P to the upside out there. Your question was also, what's the best one from the bearish position? Well, I would have to say the NDX 100, which has led us to the downside, would probably be your best bearish position at this stage, especially since we went through and took a look at the top 8 holdings that made up more than 50% of the NDX 100. But that would be suggesting you would really like to go ahead and sell the NDX 100 as prices testing the oscillator and change line at the 11,694 level. The only thing that could change your mind there, Tim, would be going back and let's take a look at the daily profiles again. So let's switch over to this chart. And here, because this is also going to give you reward risk parameters. The ES Mini, 34.31 is the target. Support, you have to go with 33.15 right now. Price trading out at 33.77. Inside the NQ, price target to the upside, 11.532. Any close below 11.076, Tim says price may go target 10.726. So it's really going to be the best short position with everything trading above the top of the daily profiles. The best time to go ahead and take that short position, if you're going to, is as price is getting up to that resistance area. That resistance area, again, in the ES, 34.31 to 34.57. The NQ, unfortunately, is between 11.532 and 11.800. Inside the Dow, it's between 28.257 and 28.395. And inside the Russell 2000, really, you're looking at 15.45. So, Tim, I hope that helps you out with regard to support and resistance and reward risk target levels for you to go ahead and make that decision. But I'll summarize it for you. It's the ES Mini and the NQ that would have the best upside target unless price closes below the bottom of those daily profiles. And if it doesn't, then your short position would be as price gets up to those resistance levels out there. So thanks for writing in. Hope that helps you out. Just because I happen to be here, I've got my other charts, and I see, and we were talking about gold earlier. But we're looking at the daily time frame. I want to take a look at the short-term time frame because it shows a TD9 count top out here. So as gold was moving higher intraday out here, you'll see that where it topped was at the resistance level. It's TD9 breakdown resistance level, 1970.80. Folks, this is a simple tool for me to teach you. I don't care if you don't know anything about technical analysis. And all that education is available by signing up for Mastering Probability. You've got archive workshops out there. But what this is telling us here, Goldilocks expected to pull back to 1949.90. Steve Rhodes with TFNN. Right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 345, S&P 47. Tim was asking, kind of searching for an instrument perhaps to trade. He was focused on the indices out here. The best setup to me looks like it's coming inside of sugar. No sugar tonight in my coffee, no sugar tonight in my tea. And as we take a look at it, you'll see that the current contract is October, but we're rolling over into the March 2021. And you can see that price is trading below the bottom of the profiles out there. That's not what Stevie is attracted to. If I take a look at the October contract as an example, today is going to be bar number 8 of a TD9 count. And you'll see that says we could see a bottom. It could be today's low, tomorrow's low, or Wednesday's low out there. That we don't know. But the TD9 count pattern is forming above breakout support at 1151, and you always like to see that. You can see Stevie's green line has turned red out here, so price has a meetup with that, which is currently at 1225. Now, we go take a look at the March 2021 contract out here. It's a day behind. Today is going to be bar number 7, whereas when we took a look at the October contract, today is bar number 8. Its breakout level is 1220. So this says you need to see a lower low tomorrow, Wednesday, or Thursday. And preferably that lower low is below today's low. It's got to be below today's low, and it's above 1220. And then what you might want to do is consider taking a long trade in sugar. The ETFs, I think there's something called cane or something like that. You have to really search around. But there appears to be a nice setup inside of sugar out there. So I'd focus and pay attention to that. As far as today, the rest of the day, folks, out here, pay attention to that spot volatility index. Pay attention to the price level of 26.60. We're at full dollar below that right now at 25.60. And what that tells us, you close below the 50-day exponential moving average. And odds favor that price will continue to rally. And inside the ES Mini, right now, you know where that price target is. It's 34.31 to 34.57. Folks, stay tuned for 2 more great hours. If you're off to start your Monday, have a magnificent one, and we'll look forward to seeing you on terrific Taco Tuesday. Take care, folks.